the best of money matters. Under the radar.
You're tuning in to Money FM 89.3, and it's now time for a special on-the-go episode of Under the Radar with me, Chua Tian Tian, where we bring you on-the-ground reports of key business events, launches, features, or developers' days. Now, it is the time of the year where Singapore's state investor Temasek releases its latest financial performance. Now, this is my fourth year covering the Temasek Review, and this year I headed straight down to Temasek's office at the Atrium at Orchard to get its leadership's take on the latest numbers. But before we get ahead of ourselves, here's some context about Temasek as well as its latest results. So founded back in 1974, Temasek is a global investment company whose purpose is to make a difference for today's and future generations so every generation prospers. With a global network of 13 offices in 9 countries around the world, the Singapore-headquartered firm seeks to build a resilient and forward-looking portfolio that will deliver sustainable returns over the long term. So speaking of portfolio and returns, Temasek reported a net portfolio value, or NPV, of 434 billion Sing dollars for the financial year ended 31st March 2025. That is up 45 billion Sing dollars from a year ago. On a mark-to-market basis, Temasek said its net portfolio value would stand at 469 billion Sing dollars, reflecting a value uplift of 35 billion Sing dollars from its unlisted portfolio. Now, the firm largely attributed the increase in portfolio value to the strong performance of listed Singapore-based Temasek portfolio companies and direct investments in China, the US, and India. Meanwhile, the state investors' 20-year and 10-year total shareholder return remained resilient at 7% and 5% respectively. But how would Temasek assess its latest performance given an uncertain macroeconomic environment complicated by heightened trade and geopolitical tensions? Well, for more, I'm joined by Peng Chin Yee, Chief Financial Officer at Temasek. Well, thanks so much for joining us, Chin Yee. And let's go straight into Temasek's latest performance. Temasek reported this net portfolio value of 434 billion Sing dollars for the financial year ended 31st March 2025. That is up 45 billion Sing dollars from a year ago. How would you assess the firm's latest performance given the backdrop of an uncertain macroeconomic environment? Was it within your expectations? What were some highlights this time around?
Actually, the rise in portfolio value this year came about from a very broad base of our investments. There was strong performance coming from our Singapore-listed portfolio companies, but also from our direct investments in China, US, as well as India. So the way we look at performance really is over the long term, right? Because year on year, you could see a lot of volatility in results. So we look at performance from a 10, 20-year horizon. And if you look at our 10, 20-year returns, they were 5% and 7% respectively. And that really reflected our work in building a resilient portfolio that can perform over different market cycles and different environment. What it effectively means is that actually our portfolio value over the last 2 decades has actually quadrupled. I think that's actually a creditable result.
I see. And Chin, the firm largely attributed the increase in portfolio value this time around to the strong performance of Singapore-based Temasek portfolio companies, as well as direct investments in China, the US, and India. So what led to the strong performance of your listed Singapore-based Temasek portfolio companies and your direct investments? How far is this related to the shifts in global supply chains?
Yeah, actually, equity markets across the world performed quite well last year, and so we benefited from that. In particular, our Singapore portfolio company has also been transforming themselves over the years to make themselves more resilient in this market environment. And you can see that, the companies who have consistently performed well have been rewarded in the last financial year as investors track their performance and see that they are actually performing in accordance to their targets that they've set out for themselves.
Chin Yee, we've talked a lot about an uncertain macroeconomic environment, so let's deep dive into where things are at for the global economy before looking at what Temasek is doing to mitigate global risks and the road ahead. So the global environment right now, very uncertain, particularly on the trade and interest rate fronts. We've seen just how the US sent tariff letters to many countries, including right here in Asia. How is Temasek adapting and also reshaping its portfolio to mitigate these risks in both the short and the longer term?
Right. So I think the first thing to say is that actually we can't react to every single headline, right? So things may unfold in ways which we do not expect. But the important things for us is to actually make sure that whatever we do it in a sort of long-term time frame, right, that can actually survive sort of 3-5 year horizon, despite what happens on a day-to-day basis. So that's the basis on which we actually construct our portfolio. If you look at the macro today, yes, it is very uncertain. We are seeing that businesses as well as consumer confidence have been hit given the global geopolitics as well as tariff uncertainty. And it's quite likely that, businesses will not be willing to invest until there is more clarity on the tariff front and there's more stability in the outlook. Having said that, I think actually there is actually not a lot of risk of recession in major markets because governments continue to provide fiscal support. Central banks have the ability to ease. So, I think in the macro backdrop, it's not unconstructive. And so for us, it's really trying to find those companies which can continue to do well in this environment. So one example I'll give you, we recently announced a investment into Haldiram. It's a snacks company based in India. And, I don't think it's going to be very much impacted by where tariffs end up for India. It's going to continue to benefit from the growth of the Indian economy and the Indian consumer. And so as we operate in different markets, we look for those opportunities that can actually still perform despite the macro environment.
And I understand, aside from that, you're also looking at alternative assets. You have an investment in Yum China as well. Could you elaborate on them?
Yeah, so Yum China again represents a theme around sort of domestic consumption, right? So if you look at China, it is the world's second largest economy. It's got 1.4 billion people. It's got interesting innovations that's coming out as well. And so for us, when we invest in China, we look for opportunities that are insulated from geopolitics. We look for companies that have got good cash flows, resilient supply chain within its own geo-economic sphere of influence with access to large domestic markets, with some pricing power, and that hopefully will give us stable returns with a narrow range of outcome.
I see. And let's talk more about Singapore. Singapore is the anchor of Temasek, both operationally as its corporate headquarters and also its portfolio exposure, where it is would you say overweight on. So what's your take on the outlook of the Singapore economy and how would that affect Temasek's future performance in both the near term as well as the mid to longer term?
Yeah, so I think, Singapore is a very open economy, right? It's not going to be immune from the challenges facing the world. As we talk about the fact that the global growth is slowing in the midst of uncertainty, I think that will impact Singapore as well. The good thing for us is actually we've got a lot of policy levers from both the fiscal side as well as the monetary side that the government can pull if the environment gets more challenging. And within that environment, actually, our Singapore portfolio company continues to hold its own. Our Singapore portfolio companies operate not just in Singapore, but actually regionally as well as globally. And, what we tell them is that the environment is more volatile, so you do have to be prepared to have a defensive balance sheet, to have access to liquidity, not take on so much leverage, so that you can weather the downturns and actually take advantage of opportunities in a downturn to actually emerge stronger. So, people talk about the fact that you don't waste a crisis. So if a crisis were to come, then we need to be prepared for it and we need to position ourselves to actually do better coming out of any crisis.
And, talking about Singapore-based companies, Chin Yee, how is Temasek working with its Singapore-based portfolio companies to navigate short-term challenges as well as strengthen their resilience and future readiness?
Yeah, so actually we have a very active and constructive dialogue with all our portfolio companies in Singapore, engaging with the board and management. We do rely on them to do the day-to-day running of their businesses, but we actually bring them together to talk about things like strategy, capital allocation, and to share our views on new trends, for example, in terms of AI, cybersecurity, and sustainability. So those conversations are always ongoing to make sure that our portfolio understand what's coming around the corner for them, and to make sure that they are building sort of sustainable business models that can make them relevant and competitive in this very dynamic environment.
Chin Yee, I know Temasek is always setting its sights on the longer term. But does building resilience come at the cost of sacrificing potential returns in the current economic climate? And how would Temasek then walk the tightrope between building a resilient portfolio versus optimizing returns in this challenging environment?
Yeah, I think it's not necessary that resilience will actually result in trade-off with returns, right? Especially in this kind of environment where, things unfold at rapid pace and you really have no idea what headlines are going to come out tomorrow. Actually, that resilience is very important to ensure that we actually get to the right level of returns in the medium and long term. So actually, we do like, looking at business models with stable cash flows, with pricing power, with ability to actually access large domestic markets, because we think that actually gives them an edge compared to other investment opportunities that we may have.
I see. And, if I may deep dive into investments, will Temasek then cut down on investments in startups or early stage companies at this point in time? Or will it tighten its screening process for putting money down into these companies?
Yeah. So actually, it continues to be very important for us to be investing in the early stage space, because what that gives us is insights into what's coming up next. And that insight is important when we bring it back to our portfolio companies so that they can also see potential disruption risk ahead of them. So the way we manage it is actually to cap it at a certain percentage of our portfolio, right? We've already said that we've capped it at 6% of portfolio. Today it's about 5%. And so we manage risk from that perspective. But, it's important for us to continue to be able to keep abreast of new developments. We do early stage investments in the deep tech space, for example, around quantum computing, around AI, around fusion. But outside of deep tech, we are also increasingly moving towards more established startup space, so sort of Series C, Series D environment, given that actually the global environment for startups has changed, and we need to recognize that and factor that into our own thinking as well.
I see. Now, if you're just tuning in, we're in conversation with Peng Chin Yee, Chief Financial Officer at Temasek. Well, Chin Yee, let's talk about the road ahead. I understand Temasek ended the year in a net cash position, and this gives it flexibility to, of course, capitalize on market dislocations and emerging opportunities. Do you think then the next few years will be a time for Temasek to invest at relatively better valuations when the dust settles, of course?
Yeah. So I think the liquidity that we have gives us the ability to lean in when the market opportunity presents itself. At the same time, we will also want to look at opportunities even in today's environment. Yes, valuations are pretty stretched in some markets, for example, in the US. But if you look a layer down, you can still find attractive opportunities in different spaces. So, for example, we are focused on the AI space and looking at core plus infrastructure, which we believe can give us sort of resilient cash flow type returns. So low double-digit type returns with strong cash flow underpinnings.
You talked about some of the trends, and I understand Temasek is looking at those long-term structural plays like your core plus infrastructure, AI value chain, and efforts that advance environmental sustainability. Take us through the key trends you're focusing on right now and how they will pave the way for Temasek to grow sustainably so that every generation prospers.
Yeah, so I think a few years back we talked about the fact that we're focused our investments on 4 trends around digitization, sustainability, longer lifespans, as well as the future of consumption. And actually, we're seeing an acceleration in the digitization trend with what's going on in AI. And within AI, we are investing in both the infrastructure layer as well as the application layer. So infrastructure would include things like semiconductors, data centers, and application would include companies which are very native in using AI to offer products and services to the world, but also companies who can use AI meaningfully in their operations to create new revenue streams and to actually position themselves differently from their competitors. So we see a lot of opportunities coming out in that space. Valuations can be frothy, so we have to pick our spots where we choose to play. So that's one area. And then the other area of focus for us, as I mentioned, was really around core plus infrastructure, right, where there are stable cash flows underpinning, energy transition, underpinning sort of digital infrastructure as well as aging infrastructure. So these are a couple of the areas which we think there are still a lot of opportunities around.
Meanwhile, at Ginny, Temasek continues to hold a constructive outlook on investment opportunities, with the U.S. remaining a key investment destination. The firm also said it will continue to maintain a diversified global exposure through investments primarily in Europe, China, and India. What are the bright spots within the geographies mentioned? How does Temasek intend to capitalize them?
Yeah, so actually, obviously, we feel that diversity is good in this current environment, right, where actually there's a lot of uncertainty. And within each market, there are different core strengths. So as you rightly pointed out, the US remains a large destination for our capital. And you know that they've got deep capital markets. They've got a lot of innovation coming out. So we're looking at the US from a tech lens, whether it's financial technology, whether it's AI, etc. And there are lots of opportunities there. Even in Europe, if you look at the initiatives behind Rearm Europe, for example, and the infrastructure spend that needs to be there, they are a leader in sustainability and green technology. So those are the areas that we would be focused on. And China continues to be an important market for us. And again, there's a lot of innovation in China, right? Whether it's in life sciences, whether it's in tech, and domestic brands. So we continue to find opportunities that are quite interesting for us in China, particularly given that valuation in China is probably more favorable compared to some other markets. So I think we're continuing to look for good opportunities in the markets that we operate in, and we hope that by doing so, we can build a resilient portfolio that can deliver returns for us over the long term.
And finally, before we let you go, Jenny, what are some future plans for Temasek, say for the rest of this year or even into the next, that our audience should know about?
Yeah, so it's really working the same thing, right? I mean, we think of our business in sort of three segments. One really is our Singapore-based portfolio companies, and there we engage with them to make sure that they have sustainable business models that can be relevant and competitive. And then with our global direct investments, we are investing behind established and emerging global leaders behind the themes that we spoke about earlier on. And then on the last part of our business, which is our partnerships, our fund management and private equity funds, we're looking to work with partners to really scale capital into alternative assets.
Thanks so much for the insights today, Jenny. That was Peng Chin-Yi, Chief Financial Officer at Temasek, and thank you so much for joining us on Money FM 89.3.
Thank you. Thanks, Cynthia.
And that's an on-the-go episode of Under the Radar with me, Chua Tian Tian, signing off from Temasek's office located at the Atrium at Orchard.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.